Your credit score matters, plain and simple. Sure, I agree that your credit score is not the most important thing financially, but to say that it doesn't have an impact is laughable. Let's look at today's environment. If you had the highest credit score on a 30-year mortgage, you're going to see a loan of about 6.7%. If you have the lowest, you're going to see a loan of about 8.2%. So what's the impact on that? That just sounds like numbers to you. Well, let's look at a $500,000 mortgage that will be 30 years. On this loan, you would pay over $500 a month more if you have the lower credit score. And over the 30-year loan, you would pay over $200,000 more in interest. Your credit score is made up of 5 components. The first one is credit history. How long have you had credit? If you're just starting out, this is going to be something that's going to ding you a little bit. But for others, maybe their parents did it. Maybe right when they started going to college, their parents added them as a user. That built a little bit of history. That's good. This is something that you can't necessarily control, but now moving forward, you really want to focus in having a long history. The second one is credit utilization. What they look at here is how much of your available credit are you using? So let's say you have one credit card, you have a $10,000 limit, you want to keep it under 30%. So that means you'd want under $3,000 on your card at all times. Anytime it's above that 30% number, it's going to ding your credit score. The next one is new credit. How often do you apply for new credit? This is something that, it can be good to get new credit, but the more times that you do this and the more checks that they have on you, the more it's going to bring your credit score down. The other one is credit mix. Credit mix is just the mix of the different types of loans that you have. This could be credit cards, it could be student loans, it could be a mortgage. It looks at all this. And basically the two most important are credit history and credit utilization. That's what's going to make up a large part of your score. And the last one is payment history. This is the other one that's going to make up a really big part as well. This is looking at, have you made on-time payments? This is actually the number one most important. The number 2 is utilization. And then the third one is really the history. They want to make sure you've had credit for a long time, you are responsible, you pay it off, and you don't use too much of the available credit you have. So you really want to focus on those 3. Again, the history is the harder one. The 2 that are really valuable are on-time payments and you keeping that utilization low. So now that you understand the makeup of your credit score, let's talk about some ways to actually improve that credit score. The first one is that you make on-time payments. This one is really simple. Do not ever go a month with missing a payment. I get it. There might be times in life where you don't really have a choice. And if that happens, you're just going to miss the payment. You're going to move on. But moving forward now, you should not be buying anything on a credit card if you cannot afford to pay it off in the next month. You should never be carrying a balance on that credit card and paying any interest costs. The next one is have a long history. So the way that you do this is you get credit cards, you don't get rid of them. So a lot of times people get a new credit card, they'll just go cancel the old one. But every time you do that, you're lowering your utilization. And the other thing that you're doing is you're getting rid of that history. You just want to keep that card open. Sure, you want to monitor it. You want to buy a pack of gum every few months for it to stay open. You don't have to continue to use it often, but you do want to keep that history strong. The next one is you can increase your credit limits. So maybe you only have like a $3,000 limit and you need to spend $2,000 to $3,000 a month on that card. You realize that's going to have a lot of utilization that's going to end up hurting you. So what you can do is you can either get more cards to increase the total amount that you can put on the cards, which will end up lowering your utilization, or you can end up calling the companies and saying, hey, will you please increase my limit? I've been spending more. I have good history. I just don't want to keep hurting my credit score because of my utilization. And a lot of times they'll end up doing it. The next one is just set automatic payments. So this is a really good way to ensure that you never miss a payment. And missing a payment, again, is what's really going to hurt your credit score. The next one is just don't keep applying for new loans. There's people who every time they go to a different store, they'll apply for the credit card there. And then they'll keep getting new credit cards for every offer they have. And there is some merit to getting new credit cards and maximizing the points and using the sign-up bonuses. But if you end up doing this super often, you end up applying all the time. They do all these checks on you, and that ends up reducing your credit score. And then it always takes a little bit of time to get that back up. So if you go fail getting approved for a card, and then you go to the next one, you fail, you go to the next one, fail, all you end up doing is digging yourself into a bigger hole that's going to be harder to get out of. So at the end of the day, those are the most important things to do. So what I want you to focus on from here is, how do I make sure I make on-time payments? And how do I keep my utilization low? And moving forward, how do I keep my history strong by not getting rid of old cards? As long as you do that, you're going to keep building your credit score. That's going to help you in the future get lower interest rate loans. But at the end of the day, don't make your credit score the number one thing. You should focus way more on income. You should focus way more on tax planning. You should focus way more on investing and your investment rate. Those are the most important things, but it is pretty easy to make sure that you do the right things that help build your credit score so you can minimize the interest cost that you have over your lifetime. Thank you for watching. If you enjoyed this video, please leave a like and go subscribe to my channel for more personal finance content. And as always, please leave your thoughts in the comments below, and I promise to get back to every single one of them. We'll see you back next week.